Welcome to Tax Strategies for Business Professionals. Hi, I'm Sandy Botkin, and I want to go over what we're going to cover and how we're going to do things. And we have two major goals. Our first goal is to increase your deductions on money you're already spending by between $5,000 and $30,000 a year. How would you like that? But in addition, we're going to show you how to bulletproof your records so you'll have the peace of mind of not having to worry about an IRS audit again, because your records will be perfect. This will be the best investment you have ever made of time and money. I promise you that. Now, I'd like to go over what we're going to do and how we're going to do things. Everyone should have a workbook. This workbook you will need to follow the players. Now, in the workbook, you have it with your materials, or you might be able to download it, but you will need the workbook to follow along. Now, as an example, on page 5 is our workbook, is our table of contents. And we're going to be covering all of those chapters prior to the appendix. And as we go through it, I will mention which chapter we're in. Now, there's a couple things about this course that are a little different than what you expected. First, we are not going to replace your accountant. There are no tax forms here. What we're going to show you is tax avoidance technique. Now, that's very different than tax evasion. What's the difference? 5 years plus $10,000, okay? So that's our first main goal. We'll be covering tax avoidance techniques. The bottom line is that this course is going to put between $10,000 and $50,000 in new deductions in your pocket. And we're going to show you how to bulletproof your records so you'll have that peace of mind of never having to worry about an IRS audit again. Imagine that. This is going to be a very valuable course. Now, before I begin the actual course itself, there's a couple of statistics that I want to share with you. The first statistic is that if you contact the American Bankers Association, you're going to find that somewhere between 18 and 20% or more of the average American's money goes out in debt service. Now, what's debt? All debt. Mortgage debt, education loans, personal loans, car loans, I'm talking everything. In addition to having about 20% of what you make committed in debt, there's a day called Taxpayer Freedom Day, which is the day that the average person has to work to pay off their federal, state, and Social Security taxes. You know what day that is? I had someone at one of my seminars thought it was December 28th. It's actually around April 17th. What that means to you is that roughly 30% or more of what you're making is committed money for taxes. Well, think about this. If 30% is committed on what you make in taxes, and another 20% is for debt, well, that leaves you 50% for everything else. What's everything else? Food, clothing, repairs, insurance, retirement for you and your family, education. No wonder people have to work 2 jobs, because they have to live on roughly 50% of what's left. So that's the first thing you need to be aware of. And by the way, by getting taxes down to the legal minimum, you think you can cure some of those retirement woes? Absolutely. Now, the next major problem is that there was a study done by one of the major universities, and they found that people who are age 65, only 4% of those people can retire with the same standard of living they had before retirement. The other 96% have to either continue working or live on some form of charity. How would you like to be in that top 4%? If you listen to me, I promise I will get you there. Okay, let's start off with Chapter 1, Introduction to Record Keeping, page 9. In 1984, Congress passed what is known as the Tax Simplification Law. It was supposed to simplify our lives and eliminate our accountants. Is that what happened? No. In fact, whenever you hear a congressman say the word tax simplification or tax reform, it doesn't mean what you think it means. It really means stick it to the taxpayers. And I'm going to prove that all day long. And whenever I try and do my own tax return, this is exactly the way I look. I feel like I'm pulling my hair out of my head, to be honest with you. Things are more complicated now than ever. Everything on your return is your responsibility. The numbers, the supporting documents, the accuracy. If your accountant makes an error on the tax return, the IRS doesn't go after the CPA, the IRS comes after us. That's very, very important.